The reason right now the demand for tokens is primary as a get-rich-quick scheme. It's speculative money trying to get rich, and therefore they're not interested in a gold token.
We're not talking about gold mining companies. We're talking about money.
Let me finish. when the demand for tokens becomes to use them in the real world as a substitute for money, as a medium of exchange, as a unit of account, that's when demand for gold tokens is going to grow.
Because of its qualities. It's the qualities that give it the value. And an immutable ledger has a different set of qualities that if people believe that it has value, then it has value. And, you know, a couple hundred million
That's why fiat currency has value, because people believe in it.
No, fiat currency has value because the government tells you it has value and it's legal tender. One of the problems we have here with both of these assets is, and this should be changed, is that they should both be made legal tender. We should not be paying capital gains taxes on gold or silver or Bitcoin.
Three well-known voices in the hard asset space break down the shift from speculative token demand toward real monetary utility. The point made is simple. Today, most digital tokens are chased as quick profit vehicles, not as usable money. But when global participants begin seeking tokens for real-world payments, store-of-value functions, or unit-of-account roles, the demand will naturally migrate toward asset-backed options, especially those tied to gold. The intrinsic qualities of sound money eventually outcompete hype-driven speculation. An immutable ledger can carry value only if people believe in it. Gold carries value because of its enduring properties. The conversation highlights that fiat primarily operates through legal tender, not trust, and that the system remains distorted by capital gains taxes imposed on gold, silver, and Bitcoin. Removing those barriers would open competition and reveal genuine market preference. A shift toward sound money tokens may come sooner than most expect. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Well, you know, I think that not only is gold the money of the past, but it will be the money of the future. It hasn't been money in the present, although central banks still hold it as money, and they've been buying a lot more of it as their reserve for their currencies. But I think that the people who are advocating for Bitcoin as some type of digital alternative to gold, and that it's going to take on the role in the future that gold played in the past, I think that's based on a flawed misunderstanding of what money is and why gold became money, and the conceit that just a artificial string of numbers can somehow replace the real value of gold and the reason that it's been money for thousands of years. I mean, Bitcoin has certainly replicated some of the monetary properties that gold has, but not the intrinsic value of the metal, without which it never would have became money. But I think it's ironic that I think to the extent that blockchain is relevant in the future when it comes to money, it will be because of tokenized gold on the blockchain. And I know we're going to talk a lot about stable coins. Well, the best stable coin you can have is one that's backed by gold, because there's actual stability in gold. There's no stability in the dollar. And if you're going to hold a non-interest-bearing instrument, why would you want to hold non-interest-bearing federal dollars when you can own gold, and then you can transact with gold and receive payments in gold for your goods and services, your labor, rather than a fiat currency that's losing value? You can receive real money that preserves its value, and you can negotiate it as easy as anything else. And if anybody wants to get in on the ground floor of this, go to tgold.com and open up an account.
Historically, Peter's right, 5,000 years, the physical properties of gold made it the best money known to man. But money is and always has been a ledger. You don't have dollars in your bank account, you just have digital entries on a computer. We live in a digital world, and ever since the telegraph got invented, gold hasn't really been used in day-to-day transactions. You don't take a gold coin and purchase something, although it preserves purchasing power. So this ledger nature to money, I think, and we live in a digital world, I think money is going to increasingly become more of a ledger. And I think that what Bitcoin did was it cracked the mathematical problem of making a ledger in something that's digital immutable. And that when it did that, now people are beginning to accept that it has monetary properties. And Peter can argue that gold is better, and in some ways gold is better, but you know, what I would say is the adoption continues to increase, and unless that reverses itself, I don't see how it doesn't increasingly, quote unquote, become money because it has money-like characteristics. Let me just add one other point. Peter thinks that digital gold, or that gold attached, you know, a gold token is the future, a blockchain-backed gold token. To me, that's tits on a bull. You know, you have gold or you have a Bitcoin because there is no third party involved. It's a bearer asset. You don't have to worry about anybody else. The minute you say, I'm going to sell you a token backed by gold, well, who are you? And how do I know the gold is really there? And so, to me, that's a non-starter. Yeah. There are two attributes of money, right? One is store of value, and one is medium of exchange. I mean, let's face it, fiat has won the medium of exchange game, you know, overwhelmingly, right? And gold and Bitcoin are these two alternative things that kind of triumph or are trying to grab the store of value case, because the fiat store of value case is a piece of shit, right?
Right, but to store value, you have to have value. You can't store what you don't have.
Well,
Bitcoin doesn't have value.
But what is value, Peter? It's perception. It's what people perceive to have value. I mean, gold's a shiny rock, and people have perceived it to have value because of it. Because
it's metal. It's metal.
Metal, fine. Because of its qualities. It's the qualities that give it the value. And an immutable ledger has a different set of qualities that, if people believe that it has value, then it has value. And, you know, a couple hundred million
That's why fiat currency has value, because people believe in it.
No, fiat currency has value because the government tells you it has value, and it's legal tender. One of the problems we have here with both of these assets is, and this should be changed, is that they should both be made legal tender. We should not be paying capital gains taxes on gold or silver or Bitcoin. And that's one of the recommendations of my book, is that the government should make all of these forms of money legal tender and let the best one win. And maybe it'll be gold, maybe it'll be Bitcoin. We all have different opinions.
It would be not as convenient for them to transact in gold coins, but once they're going to move onto a token and they're going to have it in their smartphone and their wallet and they're going to exchange, once you're choosing tokens, at that point, dollars lose their advantage over gold.
They don't.
Gold has an advantage over the dollar in the form of a token. Because
then why hasn't all the money? There is a digital gold token right now, and there's digital US dollars. Why haven't it migrated from Tether?
The reason right now the demand for tokens is primary as a get-rich-quick scheme. It's speculative money trying to get rich, and therefore they're not interested in a gold token.
We're not talking about gold mining companies. We're talking about money.
Let me finish. when the demand for tokens becomes to use them in the real world as a substitute for money, as a medium of exchange, as a unit of account, that's when demand for gold tokens is going to grow. But right now, it's just a speculative frenzy, and so people don't want to buy gold because they don't think there's enough upside. They want to buy what's going to go to the moon, right? That's what they want, and that's where the demand is. There are a lot of gold-backed tokens, but it's interesting. You're talking about Tether. What has Tether been buying? They're buying gold. They're taking the money that they're getting, and they're buying gold. They're buying gold royalty companies. They must know something. They're buying all this gold with the dollars they got.
The discussion centers on the future of money and the growing divide between digital speculation and sound monetary principles. One viewpoint emphasizes that gold's role as money is not merely historical but structural, rooted in physical qualities that made it the foundation of global value for thousands of years, allowing Bitcoin and similar assets to mimic certain monetary functions, though not the intrinsic value that underpins gold's durability. The debate expands into whether blockchain ultimately strengthens gold through tokenization, or whether bearer assets like Bitcoin represent a new monetary path. At the core is a shared frustration with a system that taxes competing forms of money and distorts true price discovery. As adoption patterns evolve, the market, not policy, may decide the next monetary standard. Let's get into the interview.
The current system, though, doesn't actually work. I mean, it works for the United States because we get to live beyond our means, but it doesn't work for the rest of the world that has to support us. And the global imbalances keep getting bigger and bigger and bigger because as long as the dollar is the reserve currency, America will abuse that privilege to live beyond its means and consume that without producing and borrow without saving. And these imbalances get worse and worse, and we do all sorts of damage to the global economy, as long as this system is maintained.
All the more motivation for the rest of the players to join the cause to de-dollarize.
Yes, it is inevitable.
But it's not an easy task.
Well, one thing I would point out is everything that the United States does to the rest of the world with regard to abusing the system, the rest of the world does to their own citizens using the exact same methods. And if they could do it to the rest of the world, they would. You know, the sins of the United States government are too long to list. The number of mistakes we have made would fill up this entire room. But that doesn't dispow intelligence and genius on the behalf of China and Russia and Afghanistan and Egypt and Turkey and Libya and all of these other countries. I think there's oftentimes a belief that, you know, our leaders are a bunch of idiots, which I'm not going to argue with you when you say that. But I don't think that the leadership on the other side of the planet is, you know, fair and treats their citizens better and, you know, is a paragon of virtue. You know, most governments are in place because they want to control the situation, whether that be the resources, the people, you know, the region, and the idea that, you know, the rest of the world is going to offer this new system that is more fair and more altruistic than the one that the United States is offering, I think is completely misplaced. I agree that the alternative already exists, gold. It's been around for thousands of years, and it's been used, and it works. But that's not what the world has chosen. The governments have chosen something else, and until the people push back hard enough and demand its use, we are going to use the money that the government tells us that we need to use. I think woke the United States and other countries up to the fact that they could no longer just rest on their laurels and, you know, use the fact that they could enforce legal tender laws to keep their money as the medium of exchange. And in many ways, I would argue that, you know, the whole rollout of digital assets and the rise of Bitcoin was maybe the greatest beta test in history to see whether it would be adopted, whether it would work, how fast it would work, how tough it would be to regulate. But I think they have now started to adopt that private technology on a regular or on a regulated and official state sponsored basis. And you've heard Scott Bessent talk about it. You've heard some other you know, government leaders talk about it. They passed a Genius Act earlier this year, which is a way to regulate stablecoins, and it talks about, you know, what they can and can't do. And essentially, a stablecoin is a digital token that can be, you know, passed around the world instantaneously, settles instantly. And then that token is tied to some other asset. So you don't buy a stable coin thinking it's going to increase a lot in value like some of the, it's not like a Doge coin or a Bitcoin where you're expecting it to rise in value. What it is it's tied to some other asset, and it should stay stable versus that asset. So you could have a gold stable coin, which is I think what Peter was talking about, or a gold token, and it will, that token will stay stable versus the price of gold. It may not stay stable versus the dollar or Bitcoin or something else, but that token will track gold. 99% of the stable coins already in existence are already tied to the United States dollars. And the reason that's important is because that was the private market entrepreneurs meeting demand that people wanted to hold dollars. It's not 99% US dollars because the market wanted 99% gold and they said, no, we're giving you dollars anyway. That was driven by the free market. And I think the United States now realizes that it can adopt that technology and use it as a way to not only help fund itself going forward. We all know about the challenges the United States has in funding itself. But more than that, they can use it as a digital weapon, for lack of a better way of saying it, to dollarize the rest of the world rather than de-dollarize the rest of the world. Yeah. Because as much as we as Americans sit here and talk about how bad the dollar is, for many other citizens around the world, the dollar is much better than their local currency. And all you have to do is, next time you travel, just talk to them. Ask them whether they would rather hold their local currency or a US dollar. Most times they will say a US dollar, especially if you're traveling to an emerging country or a developing country. For them, they look at the US dollar as stability. Now, we in this room may think that's ridiculous. We may not like it. But the market says that is the case. It's not me saying it. That's the market telling me that's what they're saying. And so I think the future is going to be some kind of a combination of government-issued fiat as well as the digitized technology and innovation that's been developed over the last 10, 15 years.
Yeah. I think the main reason, though, that the majority of stable coins are denominated in dollars is Bitcoin is generally expressed in dollars, just the way gold is expressed in dollars. People around the world think of gold and a dollar price. And so they thought that with Bitcoin, they promote Bitcoin that way. But the demand, the vast majority of the demand for stablecoins is for people who want to trade Bitcoin, and they need something to trade in and out of. And so when they want to sell Bitcoin, they can move into a Tether or a USD token, and then they can go back and forth. And so that's the main use case for stablecoins, is to facilitate trading in Bitcoin or other tokens. And so it's kind of like an on and off ramp in and out of crypto. But I don't see it being widely adopted by people who say they want dollars, because why would you hold dollars in a non-interest bearing stablecoin? If you have dollars that you want to hold, at least get interest on them, at least put them in a money market. Why buy a stable coin and let the stable coin issuer keep all your interest while the dollar depreciates?
The conversation highlights how the global monetary system has reached a structural breaking point, with imbalances created by decades of U.S. dollar privilege now colliding with the rise of competing financial architectures. While many nations resent the dollar's dominance, they often mirror the same policies toward their own citizens, proving that no government is inherently more benevolent, only differently motivated. This tension is pushing countries to explore alternatives, from gold-anchored settlement networks to state-regulated digital tokens inspired by private crypto innovation. At the same time, the explosive growth of stablecoins reflects a marketplace seeking fast settlement rather than long-term value, revealing how digital rails may eventually merge with sound money backing. Whether the future shifts toward tokenized gold, evolving fiat, or parallel systems, the direction is clear. The world is preparing for a monetary reset, driven not by idealism but by necessity. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.